So we're at a good amount of people, so we're going to get started. Let's see here. Everything you need to know about tax season 2021. That's what we're going to be covering today. Today's agenda is going to be the documents you'll need to get ready for tax season, what documents are necessary to get your taxes done, as well as some important IRS, state, and Brooklyn FI internal deadlines to get your taxes completed on time, how to make sure that you don't have a stressful tax season, being aware of deadlines. Unfortunately, this is a deadline-driven game or business. Some of the things that we learned from tax season 2020 and how things will be different this year, we're going to cover those, understanding some of the changes from how COVID has impacted taxes for tax season 2021, mostly with legislative changes and updates to what's going to be tax deductible on your 2020 tax return, and some other fun things around the PPP loans, et cetera. And then what to expect from your Brooklyn FI tax experience specific to working with us this year. So before we get started, we just want to ask you, we have this slide on all of our webinars that we do. We of course want your full and undivided attention, which is that even still a thing anymore these days? I don't think so. But we ask that you guys focus. This is going to be recorded in case you miss it. You want to watch it again. It'll be on YouTube in about a week typically. And then you'll always be able to reference it should you get lost. The idea here is that if you're going through our process later down the road and you don't remember how things work and you don't want to bug us, thank you for those of you that watch the webinars. And then reference them in the future. You are star students. All of our events and webinars are available at brooklynfi.com/events. By the way, we have over 30 webinars that we're doing this year. We are going in on one-to-many broadcasting and webinars in 2021. Please let us know what topics you'd like to see in the future if you don't see any topics on that list of webinars, okay? Because we are always looking for topics or bumping topics for things that you might want more so than what we've already decided to do. So let us know. Our emails are Shane, Emily, Matt at brooklynfi.com. Very easy. As always, of course, AJ at brooklynfi.com. For those of you that are wondering, AJ's doing great. For those of you that are wondering how she's doing health-wise, she's doing fantastic and she's recovering. I was hanging out with her on Zoom for maybe 4 or 5 hours today. So she's still got it in her. The presenters today are yours truly, of course, Shane Mason, one of the co-founders of Brooklyn FI, the head of the tax and accounting department. We also have 2 of our tax managers on the line today. They will be assisting me this year. They did a fantastic job during 2020 and 2019. You're going to hear more from them in 2021 as they take on more responsibilities at the firm and grow as professionals. We've got Emily Stadheim here. I'll let her introduce herself, and Matt McDonald as well. Emily, will you give us a little bit of background on yourself?
Yes. Hi, everyone. I'm Emily. I've met some of you already, but for those who I haven't met, I'm looking forward to meeting you in the next couple of months. I'm a tax manager here. I joined in June, I believe, and I'm working with a lot of our financial planning clients.
Perfect. And Matt?
I'm Matt McDonald, tax manager as well here at Brooklyn FI Tax, and I've been with the firm since September of 2018, so going strong, seen a lot of change, a lot of good change, and excited to be working with everyone here at the firm and everyone in the Brooklyn FI family.
Right on. So we bring over 25 years of tax experience to the table, and looking forward to helping you guys with that experience. Cool. So I just wanted to do, I'm going to pass it over to Emily now. Emily's going to take us through our first meme break, and then Matt's going to it's going to take us through our second meme break, and then I'm going to wrap us up. We're going to do Q&A at the end. So if you have any questions, I will be monitoring the chat while Emily and Matt talk. We do have some questions that were sent in ahead of time that we'll answer at the end. If I see anything more fun, I will answer live. We will do that towards the end. So with that said, Emily, do you want to walk us through where people can find some key resources related to tax season?
Yeah, so we've got our landing page pictured here. You can find a lot of great resources on it, whether you're an outsourced accounting client or a financial planning client. We have things, from bios of our team members, to resources such as, tax organizers, if you're a sole proprietor, or if you have rental real estate income. Our events, as you can see, are listed here. We post our prior webinars. This one will be available, I think Shane said, about a week from now. And then, other like pertinent tax updates, whether historical or current. And we also, we get a lot of the same questions. So we've tried to answer a lot of those questions and post them on our website. So you can always feel free to stop here first. So yeah, you guys should check it out.
Right on. If you know anyone looking for a job, I'm always looking for good candidates as well. So feel free to send along accounting and finance related resumes to brookunifiedtax.com because we're always looking for them. Cool.
Yeah. So moving into, a timeline of the upcoming tax season. I never know if I should call it tax season 2021 or tax season 2020. Shane, do you have input?
I flip back and forth every year. We're doing 2020 tax returns in tax season 2021. It's one of those
confusing. We'll just call it tax season to keep it straight here. So this top portion, you can see, these are really our BKFI tax deadlines that we promised to you. So in January, we sent engagement letters. Hopefully you've received that already. And in that engagement letter, we're hoping that you'll sign in January. You can see below, we have our deadlines for you. And new this year, we also ask that you put down a deposit before we start the tax return prep. So engagement letters, deposits are the January time item. And then once you've signed the engagement letter and put down your deposit, you'll receive a document request checklist from us. And new this year is IPM. So if you were a client in tax season 2019, you were working out of TaxDome. So we're working on shutting this down. So please don't upload tax documents to TaxDome or post questions in TaxDome. We're going to be working out of IPM, which if you sign your engagement letter, you were invited to. So you'll get your document requests and you'll get your tax organizer. And we hope that you can take a look at completing those during January. And then once you've completed your checklists in IPM, you'll be invited to book a Good Organized call with either Matt or I. And during that Good Organized call, we'll really go over those tax documents, the questions that you might have. And in the upcoming slides, I'm going to go into this process in a little bit more detail. So I'll run through this a little bit quickly here. But once we've done the Get Organized call and everything's been approved that we need, we'll start the preparation of your tax return. Once it's been prepared, reviewed, and signed off by a tax partner, aka Shane, you'll be able to book a tax return review call with either Matt or I, where we'll run through your completed tax return. And then some other deadlines that you should be cognizant for. I've already mentioned the engagement letter and the deposit, but if you issue 1099s, you can see here, January 18th was the deadline to get us that 1099 information. Obviously that deadline has already passed. If you didn't get us this information, it's okay. We can still file those 1099s for you. We just can't promise that they'll get out the door by the February 1st deadline, but it's better to file late than never. And then March 1st is really the deadline to upload all tax documents for individual tax clients. We realize, some K1s might not be available before March 1st, but really March 1st is the deadline to not put you on extension.
Yeah, which is about 40 days from now. So you should be receiving a flurry of documents. Try to get them to us as quickly as you can. I have a really good question here from the audience. Somebody said, if I'm a BrooklyNFI financial planning client, do I need to pay a deposit? No, you do not. If you're a financial planning client, your tax return is included in your fees, so you don't have to pay anything extra. That goes for outsourced accounting clients as well. So just wanted to answer that. And also the other thing I wanted to mention is that we do not have a graphic designer on staff here. So I don't know if that was obvious in this slide and in future slides as well.
This is a prettier picture, really reiterating what I just said. Prettier, when made by a tax accountant. But just to quickly run through this again, you'll sign the engagement letter, make the deposit unless you're a financial planning client. You'll receive a checklist. And I guess in this checklist, if you were a client for tax year 2019, so if we prepared your prior year tax return, you're going to get a checklist of documents that were relevant to tax year 2019. So if you had, an account at Bank of America on your checklist, you would see Bank of America account XXX. So this year you'll know to go and look for that 1099 in particular. So hopefully this will make it easier on all of you when knowing, what you need to look for. Because if you're a prior client, we should be providing it to you. So you'll do the checklist, you'll do the organizer, you'll upload all that information, then you'll get to book your Get Organized call with Matt or I. We'll review those documents on the Get Organized call, and then your return will go into prep. If we need any additional documents for you during that Get Organized call, we'll request it then. Your return will be in prep, and when it's finalized, you'll be invited to book a tax return review call with Matt or I, where we'll, look over the finalized return with you. And again, I'm going to go into a little bit more detail on all of these things in the next couple of slides. So I apologize if I'm reiterating myself because I feel like I am already. We just want to make you familiar with the process, and especially because we're in IPM this year, so it's a little bit different than what a lot of you as prior clients have experienced before.
Cool.
So here is what the engagement letter looked like. Hopefully a lot of you have already seen this. If you're one of those people who reads everything, you'll see that there's a video at the end of the engagement letter. We tried to make it a little bit more interactive. We really just need your signature and for you to accept it. And that really kicks the process off. Here is, a snip of the organizer. It should look similar to the organizer you filled out last year. Again, it's going to be an IPM, hopefully a little bit more user-friendly and interactive. It asks you, all relevant tax questions that we need the answers to from you. And then here is really, a picture of what it looks like to be in IPM. So this is where you're going to spend a lot of your time, when you're working through your tax stuff with us. You can see the overarching checklist is to upload your prior tax return, fill out your organizer. If you are a freelancer, fill out your expense organizer. Upload any additional documents. So this section would be where you upload your W-2, your 1099s, your K-1s, etc. And then once these 4 boxes are checked, you'll be able to book your Get Organized call. You can also click into these boxes and they open up with a little bit more detail. If you need a little bit more explanation, you can also, this is like my favorite feature, post comments or questions that pertain to these areas, and then we can go right in and respond to you directly there. And some of you have been doing that already, and I think it's working really smoothly and allowing for questions to get answered more quickly.
Yeah, I think we should just to highlight this one more time to back you up, Emily. This is how we're requesting and receiving documents from you guys this year. Are these checklists that come via email? So there's a PIN number that you type in. It's a lot easier than an account with a password, and it allows us to talk about the documents and to comment on each other. It's a great way for us to. It's our new system. It's faster than a portal, and it's more intuitive, and you get easy reminders, and it works out of your inbox, which is what most people, how they get most of their work done. So these checklists are going to be very familiar to you guys in the near term.
Mm-hmm. And it's all drag and drop capability, I believe.
Yep.
Which is good. So as I mentioned, after you've completed your checklist, you'll get to do the Get Organized call with Matt or I. We'll discuss the documents. We'll discuss any questions that you might have. We'll ask you any questions that Matt or I might have. And then if there are any missing documents at that time, we'll request those from you. And once we have all the documents, including any missing documents that we had, then your return will go into prep. And then your return, once it's been prepped and reviewed and signed off on, you'll be invited to the tax return review call. During this time, actually before the review call, you'll actually receive a draft copy of the return. So you can, make a list of any questions you might have to ask us during the review call. We'll discuss IRA contributions, we'll confirm bank and payment details, and then if any adjustments need to be made, we'll discuss and make those then. And then I think the next slide just really reiterates, be cognizant of the routing and account number that you're providing us. Make sure it's not a wire routing number, because if the IRS can't draw down your payment, you risk having a late payment and penalties. So it's just important to triple check that number. And you're signing off on this number when you sign your tax return. And before I pass it off to Matt, we have a little meme here which says, my daughter asked me what taxes are like, and so she could understand, I went to the kitchen and ate 46% of her cookies. I think this is basically saying that taxes suck, but hopefully you're all be getting refunds and not, giving 46% of your income to the IRS.
Love a good tax meme. I think we have one more tax meme loaded up for you, party people. But I'm going to hand it off to Matt now, who will be taking us through the next tax meme. He's going to talk to us about types of documents you can expect and when you can expect them.
You've heard before about a flurry of documents that might be coming your way from various sources. So this is what that's all about. You're going to receive your W-2s from your employers by January 31st. That's your employer. You might have more than one. Look out for W-2 corrected forms. They're W-2C, and those come after, and we need both of them if they do issue that. 1099s are due the same, January 31st, really technically February 1st, because the 31st is Sunday, so you're going to be receiving your 1099s. The 1099 is going to be an NEC form for independent contractors, but you may also receive a 1099 miscellaneous form if you have a rental property. Banks have the same deadline. That's your interest going from your savings accounts, your allies, whatever accounts you're receiving interest from. February 18th, brokerage firms have set a kind of a soft date for 1099 availability, and that's going to be your combined consolidated 1099 reports that are going to include a 1099-DIV. They may include 1099-INT. If you sold any stocks or securities, it'll have a 1099-B. Could have a 1099 miscellaneous for royalties and other type of income. But look out for that. The K1s are due March 16th, and a lot of partnerships and S corps do file extensions, and they go till September 15th. And so you may receive a draft K1 or an estimate letter. Be sure to provide us with that. And that's it for this list of documents. The flurry headed your way. So now we have deadlines. We're a deadline-driven industry. So whomst, when, and what? But whomst. Brooklyn FI, it's our deadline. We need your documents, as we said before, by January 18th. And we understand you may be receiving things after that, such as the K1s, but get us 90% of your information or more, or all of it, 100%, by the 18th. And we're good to go. IRS deadline, February 1st. That's for if you need to issue, if you have a small business and you want to issue them, you're required to issue 1099 NECs to contracts you paid $600 or more during the calendar year of 2020. So that needs to be done by February 1st. Get in touch with us, and we will take care of your filing requirements there. Another Brooklyn FI deadline is to get us all your documents by January 31st. To close your books. This is more for our small business clients. We're on top of that because we deal with most of you on a monthly basis, if not even more frequently, at least a quarterly basis. So that should be all good. The IRS deadline is March 15th to file partnerships and S corporation returns. C corps are due April 15th, and individual tax returns. That's you, and you. That's April 15th as well, unless the government decides to change the deadline again like they did last year. We hope they don't do that. We don't want to round the all calendar long tax season again, but that's good for these deadlines. And
I had a really fun question. I just wanted to answer really fast, Matt. Somebody asked me if I need to report my income even if I didn't receive a 1099 and it's less than $600. Technically, you have to report all income that you receive, no matter what the source. A 1099 is just there to tell the IRS about the income that you've received as well. So it's a triangle between you, the person that paid you, and the IRS. So that way the trillions of dollars that move around every year get recorded, but everything that you receive should be reported to the IRS. There was the famous case of the guy that caught Mark McGuire's 60, like his home run that broke the record, and he didn't report it to the IRS, and it was worth like 6 figures, and he got audited and had to pay taxes on the value of that baseball because he received a baseball in the outfield of a game. So yes, you have to record everything that you receive. $5 on the street, somebody, you find, something very valuable, you find a treasure chest full of money, you're supposed to record that as income.
I'll chime in there. Don't gifts from your family or friends don't count as income. So gifts, as long as they're under a certain threshold, that you're good there. So
yes, that's true. Gifts are special and separate.
Questions about needing to file a gift tax return, we can do that, but it's not a common occurrence, but it does happen. So more deadlines. I like the sound of that. When and what? March 1st is a qualified deadline to get all your documents to us. The IRS and state, April 15th, as I mentioned before, is your individual tax return, personal tax return deadline. And April 15th is the deadline to make your traditional or Roth IRA contributions. If you file an extension, the time to make those contributions does not extend until October 15th, like it would with a SEP IRA. That's a different kind of IRA. Traditional and Roth are a hard April 15th. We got some general updates and tips that I'm excited to share with you. Sometimes you get a piece of mail from the government. Uncle Sam's sending you some information. Sometimes they're nice and sometimes they're not so nice, but whenever you get those notices, correspondence, letters, bills, sometimes they're very demanding. Send them our way completely. Take a complete scan of it or a picture of front and back of all pages. This particular notice we're looking at here is related to you, the IRS giving you information about your identity protection PIN. And the I is IP PIN, so where we file it here, but identity protection PIN. See why we shorten it to IP PIN down there. It has a better ring to it, but the digits they're going to send you are required in order to e-file your return. We won't be able to successfully transmit or e-file your return. It won't be accepted without this PIN. And there's instructions in this letter on how you can obtain it. You can call, you can get it online in some cases. That's that. Send any correspondence our way, no matter how frightening or nice it might be. We'll make it, we'll explain it for you, and we'll make it, we'll resolve it with usually a pleasant outcome. New York City LLCs, if you're a small business owner and you formed an LLC, maybe you're a sole proprietor. Most of these deal with sole proprietors. You're filing your Schedule C on your personal tax return. New York State has a $25 annual fee, and you may be behind on a few of these. We can help catch you up. So you might have a dormant LLC that you just have. You keep it alive because you're going to start your side hustle during the state of the world now, because we have some time to do things like that. But be sure to pay this fee. We can include that as part of your tax return. And in some cases, there might be additional fees for that, but that it depends. We'll address that when we get there. Okay, retirement accounts. We touched on this briefly. Your traditional IRA contribution limits and your Roth IRA contribution limits are $6,000, and if you're over 50, that's a little more at $7,000. Your employee portion of the 401k contributions are capped at 19,500. And if you're over 50, they give you up to 26,000. So all that information with the 401k is usually on your W-2. But the IRAs, contributions, traditional IRA, you might have an IRA at somewhere like Vanguard, Betterment, or TD. We might manage your TD IRAs, so we'll know about that. But be sure and tell us about any other Schwab account you might have, or just Chase even offers IRAs. You might have it just set up with your Bank of America, whatever. So we need to know if you make contributions, and we have to determine if they're eligible contributions, deductible contributions, non-deductible contributions. You might have done a Roth, backdoor Roth, or a Roth conversion. So we'll figure all that out. There's Form 5498. If you took a distribution from an IRA, you have a Form 1099-R. Very exciting stuff.
Yes, you're scaring them. Emily, that sunset behind you is beautiful.
Yeah.
For those of you that don't know
the webinar, we timed the webinar to get the sunset for you guys.
Oh, yes, of course. Right. For those of you that don't know, Emily lives on like the 900th floor of a condo. So.
Nice, yeah.
Sorry, Matt, you want to walk us through 1099s?
Okay, we're back to 1099s, and you may be the recipient of a 1099, in which case you're going to get copy B of Form 1099 miscellaneous. But if you receive non-employee compensation of 600 or more, you might not, because some people don't comply and they won't send you one, but you should report that income anyway. But they should be sending you a Form 1099 NEC that you'll see at the bottom there. And what they've done is they've taken box 7 from the old 1099 miscellaneous and they moved it to box 1 of the new 1099 NEC. And it's not really a new form, it's new for everyone. These days, it seems new because the last time they used Form 1099 NEC was in 1982 when Ronald Reagan was president. And then they stopped using it in 83, I believe. It's been brought back because in 2015, the PATH Act changed the deadlines of the 1099s, and they changed it from, used to be February 28th or March 31st, and then they changed it, either whatever it was before, they changed it in 2015 to be March 31st if there's no non-employee compensation. So 1099 miscellaneous might report rents or royalties. You have some oil or gas investments or land in Wyoming or something.
Don't forget fishing boat proceeds, Matt.
Fishing boat proceeds and gross proceeds paid to an attorney. Big one. Medical payments too, I believe, are on there somewhere. I do know it's box 6, medical and healthcare payments. So those are all going to continue to live on 1099 miscellaneous, and those 1099 miscellaneous are actually due March 31st. But the 1099 NEC for non-employee compensation, that's due sooner. Why is it due sooner? Because the IRS wants to know. They changed the deadline to avoid tax refund fraud. So they want to know about your income sooner than later so they can get their systems prepared to deal with it. And they had problems with issuing notices when it was all recorded on one form with 2 deadlines. The computers would sometimes erroneously send out a notice with penalty for a batch of 100 1099s, and only one of them had non-employee compensation on it. So that's why they brought this 80s throwback form here. So with that, I think we have a meme break. It's our 80s throwback. The weatherman said, "Dress for the mid-80s." Here we are.
I love how all of our images are so blurry. They're so hard to see.
Kind of impressionistic. It's cool.
There's one other thing I wanted to mention. The reason that we're focusing on the 1099s here is that like there used to be all kinds of wacky stuff on the old 1099s, like fishing boat proceeds and excess golden parachute payments. But most people just have non-employee comp. They're not like fishermen or attorneys. So most people should be getting the 1099 NEC now. It's just like a wacky new form, but if it looks like a tax form, smells like a tax form, send it to us and we'll take care of it for you and explain it to you as part of our onboarding and tax return review calls. So after our second meme break, we've got about 5 to 10 more minutes of stuff here. I just wanted to cover the rest of the items. A lot of people were on unemployment in 2020 for the first time in their lives, and they are going to become familiar with a new tax form. It's called a 1099-G. The G, imagine, stands for government. The unemployment money comes from the government. And it's going to detail the amounts of the unemployment compensation you received, as well as any federal and state income tax withholding that might have been withheld from unemployment compensation. Unfortunately, unemployment income is taxable. Seems counterintuitive to try to buoy people while they're unemployed, but it is taxable income, unfortunately. So you'll need that form if you received any unemployment benefits, even if you're unemployed for just a few months during the year. You can get these on the internet. These are one of the few forms that you can just log into a portal and go get. You usually can't do that. Well, I guess you could do that with your employer, but you can do it. The state of New York has an online portal. Most states now have online portals. A lot of them are pretty janky, but they have the information that you need. So here's where you can go grab. You just Google it. Unemployment income form 1099-G, the state that you're in or you received it from. As a reminder, there is no such thing as federal unemployment. And all unemployment comes from the state. So if you're getting unemployment, go grab it from the state that you received it from. There is, at a federal level, additional funds that go to people. That $600 extra that went to everyone was funneled through the states. Anyways, that's technicality. So some of the cool CARES Act highlights and the new stimulus bill stuff that we wanted to talk about. For those of you that received PPP loans or know people that received PPP loans or even were sole proprietors and got a small one, some simple, quick updates. It's a lot more complicated than this, but these are the main takeaways from the updates is that you now have simplified forgiveness. If your loan was less than $153,000, it's now a one-page form. You don't need to provide any additional backup or assistance. If you're in the middle of a PPP forgiveness application right now and you're asking for additional documentation to see what the loan's funds were spent on to give you forgiveness, then you have an old application if your loan was less than $150,000. There should not be any additional disclosures necessary as long as you sign under penalty of perjury that you use the money for the right stuff. You will be forgiven. Now on that forgiveness, that money that was forgiven, typically when a loan is forgiven, if I lend you money and then you decide, or I decide not to pay, that you don't have to pay me back, right? That's income, right? You've received something with no strings attached. That's income. There's a special carve out in the PPP legislation that says that those loans, when they're forgiven, are not taxable. There's a concept that any expenses related to non-taxable income are non-deductible because you didn't pick up the income. The matching principle, some accounting jargon says that those expenses are not deductible, and they weren't until about 3 weeks ago, actually, with the new stimulus bill. They said that any expenses, related to that are not tax deductible. They actually are now, so it's a good thing for anyone that received PPP loans. It's kind of different from unemployment being taxable, which is bad. With PPP loans, the expenses are still tax deductible, which is good, right? So they are assisting people that are struggling.
Okay, when did they tell us that those, when did they let us know that that was the case?
I think it was December 29th. So
that's why when we were doing a lot of tax planning news with a bunch of you, we were taking the position in a safer position that it might be taxable. Let's assume it will be.
Right. Yeah. We told most people that it wouldn't be deductible. We over forecasted their tax liabilities, thinking that they wouldn't get those deductions. We told you to pay your higher estimated taxes than you should have. We're being conservative, but we got good news. You should not have to pay taxes on those. So you should have larger refunds or smaller balances due, which is cool. And some of the joys of being accountants when they can change the legislation 3 days before the end of the year. Cool. So one of the great things, one of the other cool things about CARES Act is if you tapped into a retirement account during 2020, you could withdraw up to $100,000 and not pay the traditional 10% penalty. Typically there's a 10% penalty. So if you took out 100,000, you just skim 10,000 right off the top and pay that as a penalty to the IRS. That was waived on your first 100,000 of withdrawals. Also, whenever you take a distribution from a retirement account, that's taxable. You got a tax deduction when you put it in. So when you take it out, the IRS wants their money at some point. So if you take a distribution, that is taxable. The actual tax on that is usually in the year that you withdraw it. The IRS has allowed us to divide that by 3 and spread it out like butter across 3 years. So that is helpful to people that were struggling to with cash flow and needed to take money out of their retirement accounts. Another cool thing about the CARES Act and stimulus is that all of you that made charitable contributions, typically if you don't itemize your deductions, you can't take those deductions. You can't take charitable contributions as a tax deductible contribution. It's still a nice thing that you did, but you don't get a tax break for it. That changed with the CARES Act. Your first $300 is tax deductible no matter if you itemize or not. And I don't mean like business deductions. I mean like if you have mortgage interest, real estate taxes, state and local income taxes, those types of deductions. So yeah, there's an update there. 2 more updates I have for you. For freelancers, those of you that file Schedule C, you got a side gig, you, I don't know, you do speaking tours, you do some graphic design, you build websites, but it's not your main gig. Or even if it is, we have a organizer for you. If you don't have a bookkeeper, please fill out this organizer. Okay, it's on the website, it's in the resources section. It's in your checklist of items that you need to provide us as well. There's a reminder to fill this out. This allows us to take your expenses in your own system, for those of you that don't use accounting software, and allows us to translate it into what the IRS needs to see, okay? If you don't use it, we charge you $100 to do the extra time, use the extra time to convert it into something necessary to be your Rosetta Stone to the IRS. We sell time here, so that's fair. We also have a great one for rental property owners. We have a great organizer for those of you that have rental properties. You've got a rental property in Georgia, you got one upstate New York, what have you, got an Airbnb in California. We need you to fill this out. Let us know how many days of the year you rented it out, whether you used it personally, which changes the rules dramatically, real estate taxes, etc. So please use them. We spent a lot of energy getting them to be user-friendly. All right, that's it. In terms of slides, thank you for listening. Thank you for pretending that I'm AJ. I have to log in as her to do the webinar. We do have some questions from the attendees ahead of time. I don't have any pending questions right now from the audience. Feel free to pop them into the chat box now and I'll answer them live. In the meantime, I'm going to answer these questions that people sent ahead of time. All right, so how do I deal with payments to freelancers on Upwork? I used several in 2020 to help complete independent consulting work. I'm guessing you're asking if you need to issue them 1099s. So anyone you pay $600 to, you're supposed to issue a 1099. Luckily, there's a lot of intermediary companies like PayPal, Venmo for Business, et cetera, that accept that money and then transmit it to the independent contractor. Most of the time, if you're using an independent third party to facilitate the payment, they are the ones issuing the 1099 to the person and they have accepted responsibility. However, so I'm assuming that Upwork is going to do that. I would check their faxes on their website. How should I deal with collecting unemployment and receiving PPP? I think that's fine. I don't think there's a problem with that. I think that I'm not sure how you would deal with it. Maybe there's a guilt trip. I don't know. PPP is a huge conversation outside. It depends on your income tax return from 2020, like what your income is when it comes to forgiveness. So shoot me an email outside. Is TurboTax evil? I'm not a fan of TurboTax. I think it's cool that more people can do taxes on their own. The more people, the more complicated the tax code, the more accountants are necessary to run a society, and they don't really add much to society like scientists and engineers do. So I think that there would be more scientists and engineers if the tax code wasn't so complicated. So I don't think TurboTax is evil. I think that they goofed up their rollout to provide software for free to low-income taxpayers, and that actually it's kind of evil. All right, how to handle PPP, HSAs, and taxes? That's a loaded question. I don't know. How do I handle a Nissan Sonata and owning a house? I don't know what the question is. I relocated to a new state during 2020, but kept my old employer. How can I avoid paying duplicate taxes to 2 different states? Well, when you move to a new state, you are now liable for the income taxes in the state that you live in, where your residency is. So you need to tell your employer where to withhold taxes to the new states. And then to avoid paying duplicate taxes, you file a part year tax return, which is essentially telling one state that I left you and telling your new state that that's your new pride and joy. So that's how we would handle that for you if we're filing your taxes. If you're doing it on TurboTax, you got to tell them the exact dates and all the qualitative factors going into when you actually changed your domicile or your residency. If you had one pro tip for clients, what you got, Matt?
With the multi-state thing, a lot of states were required to, if you were working from home and you moved to a different state, they were required to treat you as though you were still working in, say, New York. Or let's say you moved to Rhode Island or somewhere, and because of the way the laws were, they had to keep you in New York, so they would have continued withholding New York, even though you told them to withhold something else like New Jersey. In that case, you're going to get an other state tax credit to offset, so you're going to avoid paying taxes to both states. You're going to calculate the tax in both states, but then you're going to get a credit dollar for dollar in the other state that's not your home state. And it gets tricky with part of your residency, but we can handle it.
Yeah.
Don't try that at home with TurboTax, kids. You're going to mess it up.
Right on. If you had one pro tip for clients prepping for tax season, what would it be? I think it would be really cool if you filled out our organizer, which tells you all of the tax forms that we need from you, and then you upload them all at once. If we have to constantly check between stuff that you've uploaded and stuff that we already have, there's a chance that something gets missed. So do everything at once if you can. Quarterly taxes, do you pay a percentage of what you made the quarter before, or do you need to estimate for the year? Do you pay a percentage of what you made the quarter before, or do you need to estimate? You have to estimate for the year, unfortunately. So when we prepare your taxes, we typically tell you what you should pay in Q1 and Q2, which is gives you a safe harbor. And then we try to give all of our clients that have a subscription with us a year-end planning meeting where we estimate what their taxes are going to be and adjust from there. How much wood would a woodchuck chuck if a woodchuck could chuck wood? Emily, I'm going to let you take this one.
I'm wondering if John Owens posted this question.
Seems like an Owens question.
Yeah, it seems like a John Owens question.
I'm going to go with 12.
You can respond in the chat, John.
Accord.
John says that it was not him, so. All right, cool. What are the highlights of changes from 2020 tax season? We kind of covered those. The charitable contributions are the main ones. Your stimulus check is another one. If you haven't received a stimulus check yet, you might qualify for one with your tax return. So that'll be a main difference. You might get some extra money. Overview of the biggest tax changes affecting individuals with W-2 jobs. I don't think there are any changes for people with just W-2 jobs. I mean, for those of you that switched states, that you moved out of New York or you moved from your original state, I think you're going to be, if you didn't update your withholding, you're going to be in for a surprise in terms of large refunds and large balances due at the same time at the state level. We're going to see a lot of people with multiple states this year.
Everyone just be as detailed as possible to provide the information as to when you moved and actually established residency. Maybe you didn't actually move, but you were working from a different state, but you were just visiting someone during the madness of the times, but you always had intention of returning to your home in New York or wherever it was. So we need the facts and circumstances and details around your residency changes, or maybe there were no residency changes, but you were a nomad. And
yeah. I'm seeing so the rest of these, what can we do with unused dependent care FSA balances? If they don't allow you to roll them over, you can use them. I would use them at a pharmacy. If you want to buy some medication for the kid, if you want to use them for anything that you can get from a pharmacy that would qualify for FSA, qualified medical expenses. I would Google qualified FSA expenses. There's a lot of them. I know for HSAs, you can use them for LASIK, for example. You can use it for a ton of stuff. Maybe enroll your kid in the summer camp or something like, I don't know if that qualifies, but any new deductions this year? The one on the next line, the $300 charitable deduction is new. Will the new deduction change between 20 and 21? That new deduction should stay the same for 2021 unless the Biden tax plan, which we didn't think was going to happen, goes into effect. I don't see them removing that, but what do we need to know about how taxes will be different in 2021 with the new administration? Well, considering what happened in Georgia, if both senators didn't go blue in Georgia, we didn't think we were going to get a Biden tax plan at all. We're probably going to do a whole webinar on the Biden tax plan, especially now that they got both states, both senators in Georgia, and they have a majority in the Senate and the House, and they have the White House. So we'll probably do a whole webinar on that. But generally, anyone making more than $400,000 is going to see an increase in their taxes. Anyone making less than $100,000 is going to see a sharp decrease in their tax. I wouldn't say sharp decrease. Should generally see a decrease in their taxes, especially if they have kids. Child tax credit is very favorable with the new tax plan. These are just the assumptions that we're making based on the new on the Biden tax plan. You know, they propose things while they're candidates, and then if they get control of the legislature, they push to use to implement all of the things that they proposed during their candidacy. But what actually comes out through the very convoluted legislation writing process is going to be a lot different. It's going to look like Swiss cheese compared to what they had during the campaign. But we have a whole webinar on the Biden tax plan that's on our YouTube channel that goes super into depth on that. And we'll be updating everyone on that throughout 2021 as we see movement towards that legislation. There's already been a lot of executive orders from Biden in just 24 hours of his legislation. Back in the Paris Climate Accord, Muslim ban is gone. There's like 10 other things that John is going to be mad at me for not remembering.
Do you think they're going to bring back the state and local income tax full deduction, or are they going to keep the limit, or are they going to raise the limit?
That's a good point, Matt. That's going to be the biggest one for our clients that pay a lot of state and local income taxes. The majority of our clients live in California and New York, in high income tax blue states. The deduction, if you paid $50,000 in state and local income taxes in the past, you used to be able to take that as a tax deduction. You paid taxes. That's a tax deductible expense. Those were limited to $10,000 under Trump's tax plan. So even if you spent $200,000 in state and local income taxes because you made $2 million, you could only write off 10,000 of that 200. We expect in the Biden tax plan, we expect that cap to go away. So the more you spend on state and local income taxes, the more of a tax benefit you get for paying taxes. I know that sounds complicated, but it would be a good thing for those that pay a lot of state and local income taxes.
There's some interplay there with the standard deduction too, so that may change.
Yeah, so our participant list is dwindling as we keep running on. So I want to thank everyone for coming to today's webinar. I'm going to stop sharing so you can see us again. I just found out you guys couldn't see us the whole time, which is unfortunate, but is what it is. Thank you guys so much for coming. If you guys have any questions, email us. We got Matt@brooklynfi.com, got Emily@brooklynfi.com, and Shane@brooklynfi.com. Of course, we also have hi@brooklynfi.com, which everyone sees. And thank you for attending, everyone. We're going to put this online. We look forward to taking care of your taxes this year, and look forward to you guys staying safe.